12 years ago, I started teaching others how to trade just for the heck of it, and it ended up turning into a business. A few years ago, I started a Trading Coach podcast just for fun, and it ended up turning into another revenue stream. So here's the thing. If I can do it, and you guys know me, then anyone can. Find something you're passionate about, share your knowledge or your experiences, and start a show using Spotify. Why Spotify? Well, because they make it super easy to record, edit, schedule, and monetize all from your computer or even your phone. And best of all, it's free. So get started today at spotify.com/podcasters or download the Spotify for Podcasters app. And hey, if you need any help with podcast ideas or topics, let me know. I'll help you out. What's on tap for today? Well, in today's episode of the Trading Coach podcast, we're going to talk about news. We're going to talk about how to properly track news, how to understand which news events are quote unquote major and which ones are minor, and the different impact that they may have on your trading, depending on if you are a swing trader or a day trader. Check it out. Thank you for the detailed answer. So when you check the news, all you're doing essentially is to know when to stay out of the market if there's a major news event coming, or go home and run a trade if the news line of your technicals. Yeah. So when we're looking at excuse me, the kind of the news rundown for the day, I do it for two reasons. One, I used to not look at it at all. I used to not even care. But one, I do have an interest in what's going on, right? So I do want to know. I do want to be a more well-rounded trader. So even if I don't use stuff, I want to be aware of why the market is moving. I do think that's important, right? I used to, for example, you wake up this morning and then you see like the yen pairs, right? And you see these big, massive candles and spikes on the yen pair. Do you not get curious, right? Don't you want to know what caused this? So if you have an idea of what news is coming out on a consistent basis, you can be like, Bank of Japan kind of said no intervention, blah, 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 right? You have an idea, so it's less confusing. When what you see on the chart is less confusing, you're more confident. Because once you see stuff that's happening for no reason, then you start doubting yourself, like, man, like, was my analysis correct? Like, how come we blew right past structure? How come this? How come that? And you start kind of getting in a weird mindset. When you can understand that, this was a fundamentally based new move, that's why it kind of went so far so quickly, it kind of puts you at ease. So one, I just like I just like knowing what's happening in the market just from a pure curiosity standpoint. Two, yeah, I do want to be aware of what I want to avoid. Now, as a swing trader and a day trader, this is going to be completely different. As a swing trader, there's not really any need to avoid news events, right? Aside from like maybe your big ones, your monetary policies, right? Maybe you put a non-farm in there as well. But as a swing trader, you're looking at a time frame so high that typically most news events, aside from the two I just mentioned, aren't going to move the market in a way that will kind of disrupt anything, your natural flow, I guess you can say. As a day trader, it's a different story. If you're on a lower time frame, right, you're going to see a lot more movement. You're going to see, a 20 pip move, a 30 pip move off a news event can disrupt your whole chart, right? So as a day trader, you certainly do want to be aware of the major news events that are coming out. And I would advise taking breaks, right? I always say, don't trade 15 minutes before, don't trade 15 minutes after. Allow some room for the dust to settle. Now, with that being said, all red news events aren't major news events. All yellow news events aren't minor news events. So this is why you have to pay attention. Whatever kind of news feed you're going to use, understand like any other indicator, they are lagging. So I'll give you an example. When we came out of the recession in like 2009, 10, that recession, right? Jobs was a big deal. So every Thursday, unemployment claims came out for the dollar, right? 8:30, like clockwork, right? Every Thursday, unemployment's come out. And every Thursday, the market would go crazy because everyone was, what's the unemployment rate? What's the unemployment rate? That was the big thing that was driving the market, right? And by driving the market, I mean driving interest rate decisions, right? So the market would go crazy. And this happened for years. And then we got to a healthier place here in our economy and no one cared. We were at a good level of employment and no one cared. However, this was still marked as a red/high impact news event because historically it was. But the market didn't move at all. And there was like a 3, 4, 5 year period, even longer than that, I would say, where you didn't have to avoid this news event. And it wasn't until like 2, 3, 4 years in the future that it changed from red to orange because it didn't really move the market. Then you fast forward, COVID happens, and a little bit after COVID, all of a sudden this is important again, right? Because no one's working. These numbers are important because the Fed is saying, hey, we're paying attention to these numbers before we make an interest rate decision. Have a good day at school, buddy. So now all of a sudden, it's important again. So you can't just rely off of what's red, what's yellow, what's orange, what has 3 bull heads, 2 bull heads, 1 bull head. You have to, we talk about journaling a lot in different aspects. You have to pay attention to the market. And it's not that hard, right? If you know this one consistently comes out at 8:30 every Thursday, just check your charts, man. Go back or watch it live, check your charts, 8:30. Did we move? Did we not move? And then jot it down. And you'll have notes that said, hey, unemployment did nothing. And now you no longer need to avoid. Or you'll see that unemployment market went crazy. Avoid until future notice. So this kind of gives you a guideline of what is generally important or not important in the market. But you do have to kind of pay attention yourself and see what's actually moving the market. Because some things will that you don't expect. Some things won't that you do expect. Last question, don't mind which news. Oh, there we go. Kind of just answered that. The biggest news are interest rates. Interest rates are the biggest gear. And then you look at what affects interest rates. And that will change over time. Typically, they will tell you what they're looking for. So we'll get a monetary policy tomorrow and they'll be like, hey, we are going to base our interest rate decision on blankety, blankety, blank. Right now, it's been inflation, for example. So any type of inflation-based news, your PPI, CPI, all that fun stuff, that will affect the market. So think about it like this, right? Interest rates are the big gear. And then there are smaller gears that turn the big gear. And then there are smaller gears that turn the even bigger, or smaller gears that turn the medium gear that turn the bigger gear. And it's like putting all the pieces together in a puzzle. These typically don't matter as much. This could matter because it directly affects this. This will matter because this is the big thing in the market. Welcome to the live room, guys. Happy Tuesday. Make sure you leave this podcast a rating and a review. That's one of the best ways you can support the show. Also, if you're on social media, TikTok, YouTube, Twitter, Instagram, probably some other place, Facebook, give me a follow at Akil Stokes RTM. Just watch out, lots of fake accounts out there. So if I ever DM you, if I ever ask for money, it is not me. But if you want more helpful tips and awesome content on a daily basis, check me out on social media at Akil Stokes, letters RTM.